So this is your teacher Haris Bhatt, and you are seeing the YouTube channel Learn Accounting with Sir Haris. Today we are going to solve a question from A2 Accounting. A2 Accounting, and the topic is accounting ratios. A2 Accounting ratios, February-March 23-32. February-March 23-32. So let's see the question. It hopes it question will ask you to find some ratios by using formulas. February-March 23-22. X public limited company started its information technology business on 1st January 2022. Its statement of financial position at 31st December 2022 included the following balances. Ordinary share capital we have a $2 share 8 lakh. So beta, you have to divide 8 lakh divide by 2 per share value. You will get the number of shares, that is 4 lakh. Share premium is 60,000. Revaluation reserves 70,000. Retained earnings 24,000. 5% debenture 1 lakh. Obviously, interest is 5,000. 1 lakh into 5%. If it is going to use in the future. Bank overdraft is a current liability. Following information was also available. 5% debenture was issued on 1st July 2022. So it means that you are not supposed to calculate interest or finance cost for the whole year because the debentures are issued on 1st July. So it is supposed to be calculated for 6 months. 1 lakh into 5% into 6/12, which is going to be 2,500. Freehold property was revalued upward by 70,000 on 1st August 2022. So property is going to be revalued by 70,000. That's why you are seeing that revaluation reserve is given in the question with an amount of 70,000. Interim dividend of 0.12 per share was paid on 1st October 2022. So we have paid interim dividend on 1st October 2022. This data, which is given in the question, it is for 31st December 2022. So we have paid interim dividend of 0.12 per share. Market price of share is 0.335. Let's calculate the ratios. Price earning ratio, dividend yield, gearing ratio, return on capital employed. Let's do that. February-March 23-32. So first of all, I will calculate price earning ratio. The formula for price earning ratio is, as it is already, I have already shown it in the question. So we can use that directly. The formula is market price per share over earning per share. Formula is going to be market price per share over earning per share. But you remember that market price is given in the question, but earning per share is not given in the question. So for that reason, you have to find earning per share first in order to calculate GAS. In order to calculate price earning ratio, you have to find earning per share because the formula for price earning ratio is market price per share over earning per share. And the formula for earning per share is profit for the year number divided by number of ordinary shares. So let's do that. Price earning ratio, market price per share is given 3.35 divided by earning per share profit for the year divided by profit for the year divided by number of ordinary shares. So let's calculate profit for the year first. If you just look at the question, retained earnings is being given 24,000 and it is clearly stated that we have paid interim dividend of 0.12 per share was paid on 1st October. Is this the start of the question? Yes. This is the start of the business. Started its business on 1st January 2022. It means that there was no retained earning in the past. All the retained earnings, whatever we have at the start or we have accounted for, that is all profit. So 24,000, if we add dividend into retained earnings at the end, we will get profit for the year. So interim dividend is 0.112 per share. So let me calculate number of shares. As I discussed with you, 8 lakh divided by 2, that is going to be 4 lakh multiplied by 0.12 will get the amount of dividend, that is going to be 48,000. Now you can add 48,000, 24,000 retained earnings at the end plus dividend 48,000. You will get the profit for the year from which we have paid dividend, and the retained earning at the end then will be 24,000. So let me calculate 24,000 plus 48,000. That is 72,000. Okay. So we have calculated profit for the year 72,000. Now I can find the earning per share. That is going to be profit for the year 72,000 divided by number of ordinary shares. That is 4 lakh. So what is the amount of 4 lakh? 8 lakh divided by 2. That is going to be 4 lakh. That is 0.18 per share. 0.18 per share is going to be the earning per share. Now I will calculate our price earning ratio, which is market price per share over earning per share. Market price is 3.35 divided by earning per share is 0.18 multiplied by 100. No, the answer is going to be in times. Sir, how you are saying that the market price per share is 3.35? Here it is written 3.35 divided by 0.18. So the answer is 18.61 times. So that is quite good. So market price 18.61, 18.6 times. That is very good, right? So it means that we are basically market price per share is 16 times of earning per share. So 18.6 times. Now the next ratio is going to be gearing ratio. Dividend yield ratio is not required. We have to calculate the gearing ratio in the question. And the formula for gearing ratio is fixed cost capital divided by equity plus fixed cost capital. Or you can say non-current liability divided by equity plus non-current liability. Both formulas can be used. So if you see the non-current liability, it is clearly stated that the non-current liability is 5% debenture, that is 1 lakh over, let me write, over equity plus non-current liability. Now I have to calculate the equity at the end. So equity is going to be the ordinary share capital, 8 lakh. Then you have to add share premium. Then you have to add revaluation reserve. Then you have to add retained earnings. At the end, you will get the amount of equity. And debenture, we have already knew that the debenture is going to be, we knew that debenture is going to be a non-current liability. Okay. Let's see next. So what we'll do, we'll add them up. 8 lakh plus 60,000 plus 70,000. Let me calculate. 8 lakh plus 60,000 plus 70,000 plus 24,000. That is 954,000. I will write here 954,000. That is the amount of equity. Now you can solve the question. 1 lakh divided by 10 lakh 54,000 multiplied by 100. So the answer is 9.49%, or you can say 9.5%. Right? It means that most part of the business is financed by the equity. So gearing ratio is quite good because this is a low geared company. We are not emphasizing or we are not relying on non-current liability. Out of the whole equity, the non-current liability is just 10% of the whole capital employed in the business. Okay. Now let's move forward. Price earning ratio, dividend yield, we have calculated. Gearing ratio, we have calculated. Then return on capital employed. Okay. Achha, dividend yield ratio, we have to calculate. Okay. We'll calculate that afterwards. Return on capital employed ratio. Return on capital employed ratio, the formula is going to be operating profit, profit from operation, divided by capital employed into 100. Profit from operation divided by capital employed. Sir, what is capital employed? That is the same equity plus non-current liability, which we have calculated in gearing ratio. That is the same as known as capital employed. And we will multiply it with 100. Now let's see. We have profit for the year, which is 72,000. And we need to find the profit before interest. Interest we have calculated. Remember that I have told you already because of the same reason that 5% debenture is given in the question and the debenture has been issued on 1st July. So 1 lakh into 5% into 6/12, that is 2,500. So profit 72,000 plus we'll go reverse, right? Profit 72,000 plus the debenture interest finance cost, which is 20. 500, we will get 74,500 profit before operation divided by capital employed, equity plus non-current liability, which is going to be 10,54,000 into 100. We will get the return on capital employed ratio. It shows that how much return you are getting on your investment. 74,500 divided by 10,54,000 into 100. 7.07 times, which is quite normal that we are getting 7.07% return on our investment. Dividend yield ratio is dividend per share over market price per share. Dividend per share we have to calculate. Interim dividend we have calculated 4 lakh into 0.12, that is going to be 48,000. Now we'll calculate dividend per share, which is 48,000 amount of dividend divided by number of ordinary shares, and number of ordinary shares are 4 lakh. We can calculate dividend per share. 48,000 divided by 4 lakh, that is going to be 0.12 per share. That is already with us. Yes, I have calculated it again because interim dividend is 0.412 per share, and that is the only dividend given in the question. So we can calculate it easily, right? So dividend per share is 0.12 per share divided by market price per share 3.35 multiplied by 100. We will get the dividend yield ratio. Let me calculate 0.12 divided by 3.35 multiplied by 100, 3.58%. 3.58%. It shows that we are getting how much return we are getting on each dollar invested. So for $1 which we invest in the business, we are getting 3.58% of dividend every year. So how this is we are done with the question, and we have done the ratios. Let me see some other part of the question. Price earning ratio calculated, dividend yield ratio, gearing ratio we have calculated, return on capital employed. Then industry average ratios for 2022 are price earning ratio 16 times. So we are having 18.6 times price earning ratio. So it means that our market price, our capital growth of the business is good. Company is on the rise. We are looking for future growth and expansion of the business. People are attracted towards, investor has confidence in our company. They want to invest in the business. 18.6 times is more than industry average. Gearing ratio is 25%, right? So gearing ratio is on the lower side, is only 9.5%. So we are not a highly geared company, even we are low geared company. So we are not relying much more investment through outside capital. It means that our own investment is at risk. Our own investment is at risk, right? Because we are not taking much more debentures or loan from outside liabilities. So we can increase it to 25% because 25% is considered to be a good ratio regarding gearing ratio. It means that your own investment, all of your investment is not at stake. Some part is financed through non-current liabilities. This is also known as capital structure, right? So this is how we are done with this particular part of the question. बताया भी है कि प्राइस सेलिंग रेशियो के बारे में बताना है आपने. 4 नंबर, comparing the result with the industry in respect of price earning ratio, मैंने आपको बताया है, और दूसरा भी उसने इसी तरह से बताया होगा कुछ. रिटर्न ऑन कैपिटल एम्प्लॉयड, gearing ratio के बारे में बताया, वो मैंने बता दिया आपको. One of the directors suggests that no final dividend for 2022 should be proposed. Advise whether or not the director should propose a final dividend for 2022. Justify your answer. We should propose a final dividend because the interim dividend is basically paid only for some portion of the year when the company is getting high profits. The profits of the company is not that low. We are getting 72,000 profit, and after making the interim dividend of 48,000, we are still left with retained earnings of 24,000. So in the next year, as we have given interim dividend in the current year and there is no final dividend, we can propose a final dividend which is recommended and should be approved by the shareholders in the annual general meeting because it is supposed to be paid in the next year. So you might have more profit in the next year and we can easily pay final dividend, and some percentage should be assigned to make the payment to the shareholders for the payment of final dividend, right? So this is how we are done with this question. And next question, inshallah, we'll do in our next class. You can solve some more questions at home. Let me give you. This is the question you can do at home. This has come in February, March 2032. You can write it down. February, March 2032. Then this question you can do, which is very easy. May, June 1731. May, June 1731. Then May, June 1633. May, June 1633. Then May, June 1632. May, June 1632. These are quite easy questions, simple questions. Then May, June 1631. So all questions like May, June 1631, May, June 1632, and May, June 1633. Remember this, that in dividend yield ratio, when you will calculate dividend per share, you will take both dividend paid and proposed. You will take both dividend paid and proposed according to the new terminology. So remember this, you will take both dividend paid and proposed in the question. Then you can do this question also, May, June 22, 31. Easy, May, June 22, 31. I think that's fine for today. Inshallah, tomorrow at 1, we'll go with some more questions and we'll try to complete the chapter. May, June 22, 31 was that particular question which I have shown you. Okay, ji then. Allah Hafiz.
Allah Hafiz, sir.